Hello, my name is Stuart Sorkin. I'm an attorney and a CPA who has been practicing in the area of exit strategy planning for the last 35 years. People have a common misconception about exit strategy that it only relates to retirement, but it relates to growing your business in a successful way, whether you are currently exiting it or building for a long-term exit. The most frequent question in my 35 years of dealing in exit strategy planning is, what is the biggest mistake that entrepreneurs will make? And the biggest one is probably a more general question, is that their exit strategy is very vague. They have no idea what they're trying to accomplish with their exit strategy, how to add value to their business, and how to maximize it. So I'm going to give you a short outline of some of the things that you should consider when you are starting to consider an exit strategy. Because exit strategy begins effectively the day you start your business, because if you don't know where you're going, how are you going to get there? So the first question I would typically ask a client is, have they met with a financial planner to determine what their financial needs are? Since you are selling your largest asset, your business, how does that dovetail into your overall plan? And so the first thing is that by meeting with a financial planner, they can tell you, based on what your projected expenditures are, your life expectancy, etc., what you will need to have in retirement to have a 90+% certainty that you will not run out of money and you will accomplish all your goals. So that sets the first parameter. Then you look at your other assets to see what the difference between that is and what your business needs to be. The big issue you also find is, though, that most entrepreneurs, probably because of their ego, tend to look at their businesses and the value of their business that is potentially a lot higher than the market would generally get. Therefore, one of the first things, this next thing that I would ask a client to do, is to hire a CVE, a certified valuation expert, to come in and value the business. So then we know where you are. Once we know where you are in relation to your plan, then we can look at and say, okay, if your business and your total assets are in excess of what you need, then there are tax planning and estate planning ideas to pass some of this wealth to the next generation in a more tax efficient manner. Alternatively, if you're not there, how are you going to get there? Can you do it through internal growth? Do you have the time for that? Do you want to become potentially a strategic acquirer and acquire another business, merge that in, integrate it, and to make your number? But be careful, because integration of two businesses can take time, and that may delay your eventual exit if you have a fixed timing. The other key issues that people should look at is, have you golden handcuffed your key employees? Because the acquirer will probably want them, and that will add clear value to the business. Do your financial statements properly reflect where you are? Have you cleaned up any errors in your financial statement, or things that would make you look better? Have you prepared for due diligence? Because most people don't realize that once they go to a letter of intent, which is the first stage in an acquisition, 60+% of the deals do not close, and a vast majority of them do not close because due diligence either uncovers a problem, or it takes too long and the value of the business is dropped because the entrepreneur is spending time doing due diligence and not working on his business, and therefore the price goes down. So these are some of the general concepts that I think people do not focus on and should focus on. Entrepreneurs resist the idea of exit strategy, but I tell them that every entrepreneur will exit their business in one of 6 ways. They will either sell it to family, they will sell it to management, they will sell it to a third party, they become an absentee owner, it gets liquidated, or they die. Most clients do not like the last 2 alternatives, so they really should look at one of the first 4. And within that framework, I will tell you, the best business to be sold, regardless, is when you're an absentee owner, because then the business is going to run well without you. I hope you found this talk interesting, and if you'd like to have further discussions, please feel free to call me at my office or go to my website and send me an email, and you can find a lot more helpful information in my book called Expensive Mistakes When Buying, Selling Businesses and How to Avoid Them in Your Deal. Thank you for your attention. Have a great day.